On that note, I will just say thank you again to John and Nathan and to Argyle, and I will turn it over to John. So thank you so much.
First off, Krista, thank you. ACUMA is such a great organization. We're happy to be a partner, and yeah, thanks for allowing us the stage to kind of dive into one of our favorite topics. So thank you.
Absolutely. Thank you, John.
Well, first, everyone, thank you so much for joining. I know everyone's really busy, but I do want to give a special shout out to Nathan and the GreenState team. One, for joining us today, but two, for being great partners of Argyle. Um, this is a conversation between Nathan and I for the next 35 minutes. We don't want to kill this in PowerPoints. We just want to bring to light a topic that I think we're both pretty passionate about, knowing Nathan. But I will ask that if you're attending today, please ask questions. Again, we want this to be informative and making sure we're getting to the root of any questions that you have. But before we dive in to the agenda, I want to first give Nathan the opportunity to intro himself and then talk a little bit about Green State and what their focus is. So, Nathan, I'll pass it to
Yeah,
you.
thanks, John, and Krista. Thank you as well. I appreciate this support from ACUMA. So Nathan Cipher here. I'm SVP of Mortgage for Green State Credit Union. Have the privilege of leading our sales, operations, and servicing team here in the mortgage side. I've been here for almost 15 years. We are a 440,000 strong member credit union located in Iowa. We do roughly 2.2 billion in originations, and for those that know our loan sizes here in the state of Iowa, it's a lot of units that we put up. Our team does 7,000 plus units a year. It's not big loans. It's a lot of helping our members, members helping members. So very proud of what our team does and each and every day as part of that. And having great partners like Argyle really help us to deliver those results and put up those numbers month after month from that standpoint. So thank you, John.
Of course, of course. And I think Nathan, one of the things that we've talked a lot about is your guys' digital strategy. And I don't say it's unique. I just think you guys have always been at the forefront of thinking how to make the member experience digital, fast, efficient, smooth. And that's why I thought you was just like the perfect kind of co-host for our discussion today. But in terms of agenda for the attendees, we're going to start with the problem that Nathan and his team was up against at Green State, how they've thought about, again, digitizing the experience for their members. We're going to dive into some insights, so get Nathan kind of sharing some perspectives. We're going to talk about how this digital first strategy leans into rep and warrant relief with the agencies. And then we'll end with how credit unions should be thinking about their vendors. And I think it's a sensitive topic, but what should you expect about from your vendor partners to drive innovation, to drive adoption, et cetera? So with that, we can go ahead to the next slide. Nathan, I want to tell the story of how this all kind of came together before you kind of talk about the challenge. I remember flying, I think it was Charlotte, the Encino conference, where
Yeah.
I think you would say this about yourself, but you're a tough sell. Like you're very, you want to see proof production. You definitely are great to work with, but from terms of adding you to the Argyle network, it wasn't the easiest. But we knew that we needed to spend some time together to kind of map out our vision for where this new verification type was going, and then how that, if that would align with Green State. So fast forward, I think a year and a half later, we're here. So just to
Yeah.
start, what was the challenge? Why did you take that meeting, a year and a half ago with us? And then we'll get into the solution here in a little bit too.
Yeah, no, definitely. I know we're a tough sell from that standpoint, John. So persistence pays off with us. But it is that piece of we were looking for a way to better collect member information, right? And part of it, I'm just going to be frank, the cost of getting verifications, we need a full written verification of employment for a member. That cost had been growing exponentially over the last couple of years. And so, what can we do to decrease that? One of the things that's unique for us is that in our fees, we don't want to nickel and dime our members on a loan estimate and closing disclosure showing, hey, you're going to get this fee and you flood and appraisal, verification, verification, verification. We socialize that into our processing fee, and our processing fees don't have a lot of margin in that. And so we've got to make sure that we're always looking at how do we get that information? How do we get that cost driven down so that we can return that to our members? I think that's what credit unions are phenomenal for, is we return those profits. We want to keep those things lower so that members can afford to buy that home and do that big purchase in life. And so as part of that, we were looking for a technology provider that could really help us collect member information on the application as going through that up front, really embedded into the application. So we use a point of sale in Encino. We really wanted it driven in that because we want to keep members in the same journey from start to finish. That's a big piece for us. And all the while reducing our loan origination costs compared to what we've used previously. Again, you still need those other partners out there, right? Not everything is going to fully 100% take care of what you need. But for us, we were looking for alternatives. And that's where, that meeting with you, John, at it was Encino in Charlotte, we had that conversation, that dialogue about what you can bring and said, hey, why don't you just take a look at it? And that's for a tremendous partner like yourself with Argyle. Said, the proof is in the pudding. And that's really what we've found from that standpoint since that initial meeting is that you guys have delivered those results for us. And we're seeing it, just continue to grow every single day as far as the implementation and the lift that we get in our processing and production times.
And I know we've chatted on this before, the philosophy of like we'll bet on Argyle. I remember telling you that on from a
Yeah.
vendor perspective, I've always said that, especially with a new product, and everyone on this call knows there's legacy providers in this space that vary in price and method. But I think it's critical that a vendor says, no, Nathan, I see you're concerned. Give us a chance and we'll prove to you. And I think if we go to the next slide, why we do that is for results like this, right? That you had a strategy. We said we can fit in your strategy. And this is the output. And if you kind of want to overview how, and we're going to talk about the point of sale in a minute, but just at a high level, how Argyle has changed both manufacturing process and speed and money, I think that'd be a good start.
Yeah, with this, the big thing is that obviously you need both sides of the house to be in alignment on the vendors you're using. Sales has to have the buy-in and the understanding of why you're plugging something in, right? It's only successful if the team is bought in, understands it, knows the why. We've got to tell that story every day of here's the why of what we're doing for you guys. It's to deliver a better upfront pre-approval, a better upfront experience for the member. Anytime we bifurcate it and say, hey, member, you're starting in this channel, but we need you to go over here and do this. It feels incongruent. And so we want to try to keep the member in that track from that standpoint. And that's where you guys brought that solution is in our point of sale, the members interacting with us, they're getting those prompts, keeping them in that. And then on the operation side of the house, having that full information up front on a file, not waiting for it so we can get the file handed off and moved over to processing and ultimately underwriting. Having it all up front paints a clearer picture and gives that file a stronger presence than it otherwise would. And again, the biggest thing is that verification waterfall, as mentioned there, really does help drive down origination costs. Like I said, we have our processing fee that is just it builds in quite a few of our fees, so we're not nickeling and diming our members. And so as part of that, those files where we try to avoid written verifications as much as possible, just because again, it does add cost, but there are those times where we absolutely need to have those pieces in a file. And from start to finish, we want the full picture of the member, not just for a written, but just the pull through. That's where the solution really does work for us. And when we compare what we had to what we have now, the savings on our loans is upwards of $95 per closed loan, which is huge for us. Obviously, when you have that lower processing fee, that really does deliver results back to us that we can invest in other ways in our team and for our members out there. I do want to say that net stat of 29% of closed loans, that number represents of our total loan production manufacturing, how many had matches through the Argyle platform. We don't track currently how many files we have full verifications on and integrations through. But of our closed loans, 29% had gone through Argyle in the month of August. And that's roughly 900 units of closed. That's a really hardy number for us that we are able to then, 300 loans, we saved $95 plus. You can annualize that savings, and really it starts to drive home that this investment has paid off for us as far as reducing overhead.
And I think one thing that that's important in this like full end-to-end workflow, you talked about the alignment between whether it's productions, operations, even closing. was a difference in the way we view verifications versus others, where yes, you guys are getting a report, your PDF report, we're populating data up front. But there was all those scenarios where you've got a member that's got variable comp and you need your underwriter to go back and get a year-end pay stub. That
Yeah.
inherently, we're giving that to you as a part of our just, hey, here's all the data on this member. That lower cycle times, right? And I know your team has expressed a lot about how it's got them out of pickles,
Mhm.
typically where you have to go re-request and et cetera, et cetera. It's just a differing thing that we view at Argyle is that should be a part of every single verification that you get.
Yeah, actually, that's a great point, John. Thank you for reminding me of that. Is that those scenarios? I think everyone knows right now. Variable income is a hot button, and so the data that comes into the system for us that helps tremendously when we need those year-end pay stubs to show that whatever it may be, bonus, other income is there on that really has helped us quite a bit on the underwriting side. And the one thing is that going back to a member over and over to ask for this and that, now I need this, and this opens up that box. Having all of that information up front really shifts the member experience and will show up in our NPS scores. I mean, the experience was fast, efficient. I didn't get pinged to death for this next document. It's there from the start, which is a huge lift for sales, processing, and on down the chain. Even on the back end, which we'll talk about in a bit with rep and warrant and repurchases, having that full picture that we can say, oh, we've got that already. It's just in this folder. Pop it in there. It has saved us in some instances as well.
Totally, totally. So overall, the challenge, the solution, but now I kind of want to go further and pick your brain, Nathan, on a few other
Yeah.
things. Um, Going back to like you've already expressed, I want this in the point of sale. I think there's a lot of debate on credit unions being comfortable with putting services like Argyle, where you could incur a cost upfront for maybe a loan that doesn't close. So I think like this is so important. Like, can you share your perspective on what got you and GreenState comfortable? Say, I'm going to let this thing work in my point of sale, and be really kind of have conviction around the idea.
Oh, absolutely. I mean, again, for us in the point of sale, it's the philosophy. I'm always willing to try new things. I'm going to say that as long as the proof is there, and that's where John brought that from that standpoint. But meeting members where they are is the biggest thing. 63% of our members are checking things on their phone. I think we've got some stats on another slide here that show that the more that we can just keep them in that ecosystem and working through that is huge for us. That data that comes in, that's where we want them working as far as providing the information and the process for us.
And from the member experience perspective, you mentioned NPS earlier. I think
Mhm.
another common question we get is it going to deter my members from going through a full application to have some digital tools up front? Any comment on that, Nathan, from what you see?
Yeah, I mean, the thing is that they can easily, if they feel like this is too intrusive or they just don't have it ready, they can always skip to that next step in the process. I think I skipped over a piece of your last question, John, is that the big thing for us is that getting comfortable with the cost, that some of those loans aren't going to close. We take a look at our pull through rate on our closed loans, and roughly 2/3 of applications come through and they go from start to finish in our system. And so it's just a law of averages that the reduced costs we have in manufacturing the loan will play out in the end. So you're going to have maybe some increased costs on upfront pieces, just like you do with a credit report. There just becomes a baseline of that this is an expected cost for us and that we're willing to take it if it delivers a better member experience. And for our sales team to have that information right at their fingertips that they can deliver a pre-approval letter much faster. Response time is so critical in mortgage right now. The first person to pick up the phone, the first person to get an answer out to a member is probably going to win that deal. There's times where it's obviously comes down to some other factors, but response time by having those documents that, hey, I can't give this to you because I need to get the income verified. The LO, when those connections happen on such a high percentage of our files when we need it, is huge. And so again, we just decided that that's just going to be a cost that we are going to absorb because we can see that on the end it's saving us on our true close loan production. We took that as a business cost and a business decision just to implant it in the point of sale for us.
One thing I might add to that, again, we love your take here, is feel like folks, the decision's always, do I order my services with more choice and control downstream, maybe in the LOS, or do I move things like you're doing up front? And I think from the Argyle perspective, we have spent a lot of time on change management because we'll call it what it is. When you give, whether it's the loan officer or the operator, time to make that decision, do you click a button and get a report, or do you go through a consumer experience and they'll go and click a button? So how can you put the controls in, whether it's automation or in the point of sale, to use a more efficient tool, right, with a higher return while cutting costs? And again, we work with all of our clients on that. I feel like that change management piece is critical, right?
Yeah, getting LOs to adopt it, obviously that's, one of the biggest pieces, one of the biggest challenges. And really, you've got to be able to deliver that message, tell that story that here's how it helps you. And for our team, the biggest thing that we could point to is that, they're very acutely aware of closing costs, right? When we're competing, we want to be able to deliver, go out with our best foot forward from the jump. And so the moment we can deliver that message that, hey, by switching to a solution like Argyle, putting it into our point of sale and really encouraging members to utilize these services, we are able to hold costs down. So we don't have to each year go back and say, we need to adjust our processing fee. We need to add this in. We need to change that. When you really paint the picture that this will save you from the standpoint of you can win the deal by having the information you need from the jump, but then also it helps us control costs. That's a message that resonates with the sales team. And then even to the back end, guys, this helps us. They don't get as far into the weeds as repurchase and all of that, but it does play a piece of the more information we can provide and have available for Fannie and Freddie to get those reps and warrants and have a truly saleable loan. There is some of that back end, but we really try to sell it to the sales team as far as here's the why. It helps us keep our costs down and keep us extremely competitive in the markets that we serve, and that resonates with them. And then again, you get some of those as part of change management, John. You guys have been phenomenal as a partner of getting in and helping us on sales calls. Hey, here's the benefits of Argyle. Here's how to explain it to a member. Here's how to set it up, and really work with us as far as going through that change management process, because obviously it starts out slow, but once you get some of those champions in that say, hey, this really does work, tell your members to spend a little bit more time on the point of sale, take the moment to fill out that Argyle piece. It helped me with this. When those leaders in your sales team really adopt it, it drives it. And again, Argyle was on our calls. I think it was like monthly for a period where they were just coming in and saying, what questions do you have? How can we help you get comfortable with this sales team, and really drive that change home? And so we continue to see month after month just an additional lift, because the team is further embracing it and understanding it and learning how to sell it as part of their process.
Absolutely. Absolutely. So let's transition. You mentioned at GreenState, what you see in your data in terms of how your members are interacting and how they're interacting with your services. From our end, right? Data says this trend of I want a digital, I kind of want to click here, get mortgage feel to it. They want digital first. The lenders I think are slowly, and we've certainly seen this in our kind of 3.5 years run in mortgage. This idea of sharing data, utilizing consumer tools is definitely gaining traction. And we've also already talked from a lender perspective about the benefits. But how does this look on your side of the house, Nathan, with what you see in mobile apps and folks wanting to go digital from GreenState side of the house?
Yeah, a great question, John. Is that, roughly, it's over 98% of our applications start in our point of sale. We drive members to that. That's how we interact with them. Yet again, there's always those times where we take a member that's not how they want to start and how they want to proceed with their mortgage. We're happy to work with them too. But when we're driving members to that point of sale, that's really where we want to keep them from that standpoint. So again, plugging in, tech into that to make it a better experience. People don't know where to go and get these documents. I hate to say it, is that people just pay shows up on your bank statement. They just expect it to be there. And when you ask for a pay stub, it's like, what? When you can explain, hey, that ADP system that you probably haven't been in yet this year, it's the repository for all that. You can just put in some credentials and it pulls the mortgage application will pull in that information. You don't have to go download and upload. And it just makes that experience. It's like, the light bulb goes off for a member that, yes, I should do that, and get that information in. that's really what we're trying to drive our membership to, and that's what people want. Is it they don't want to have to go through a file cabinet, take a picture, and or print something. We want to make it frictionless, and this really did help that from that standpoint. We saw NPS scores tick up from that standpoint of the point of sale side of it. They're saying it is easy to use, and that's really a big driver for us.
And before we, kind of dive into rep and warrant relief and what you're seeing on that perspective or that piece, um, what advice, Nathan, would you give attendees today who maybe haven't got to the point where you're at with the digital strategy? Like, if you would say, hey, if you leave this webinar around driving automation to make better member experiences, what would that advice be? How do you kind of start the journey? Like, what would you be looking at if you were starting new?
Uh, you got to start somewhere. I'm just going to say is that you know leveraging tech. I don't think that's something you can escape. And if someone has some advice that says otherwise, I'm open to it. But it is people are there. Our phones are this is where we do everything these days. Like you pay bills, you go in and review everything, and that's where we just need to lean in on tech. And I know credit unions, that's sometimes we're a little slower to adopt. I'm going to speak for myself as well. Is that initially there's some hesitancy, there's the cost piece, but then as you start to see the lift that you get from the origination side down through the operations channel as well, that they're able to move those loans quicker, reduce the turn times again on your files, and even on the back end, reduce repurchases. There is benefits there that even don't always translate to tangible, right? You can't always see the dollars, but there's just that piece that the team from start to finish really does feel the lift and benefit of. And again, members want to interact with you in one channel. Again, they want to I want to do my application. I want to sign closing documents. I want to do all of these things right here in the palm of my hand. That's where, again, if you can plug in tech, whether with your point of sale, with your LOS, and then add in the services that really help the member do their jobs and submitting an application so we can get that loan closed. Those do provide lift, and again will translate into better NPS scores and then results that you'll start to see more closed loans.
Not to go a little bit off agenda, but I got a little curveball for you, Nathan. I was just thinking about this as you were talking because we've spent a lot of time in the point of sale, which is where we
Yeah,
operate. But we'll also be the first one to acknowledge, and I think anyone in the verification space would say this, we can't cover 100% of GreenState's members. It's just not possible.
yeah,
How do you guys think about like workflow with a consumer permission product, whether it's banking or payroll, right? Like, I guess talk to us about your workflow, start to finish, and how
yeah.
how credit unions should be thinking about setting up their verification cascade or waterfall.
Yeah, obviously, with this, we plug it in. It's the one that we lead with from that standpoint. So, if a file member hasn't connected initially, really getting operations on board as well. So I've talked a lot about sales, but operations also needs to understand the buy-in of this. Again, reducing costs. That's one of the cost of originated loan has just kind of continued to increase. And so getting operations to understand that this is our preferred method of verifying whatever it may be is critical. Because again, anytime we can use the lower cost provider, that's what we want to do. That's where you guys have been. We've led with Argyle. If that doesn't have a connect, then we move down our cascade and down until we hit, our end provider on that from that standpoint. But again, in those times when maybe a member didn't initially take the time, like you were saying earlier, is if they said, you know what, this feels a little too intrusive right now. I don't really want to, taking them back into the path and saying, okay, hey, didn't complete it at this point, but we do need that now. And telling them, hey, you're going to connect with this. Will save you quite a bit of work. Our operations team will then push that link out from you guys to say, okay, let's connect to your payroll provider, whether it be ADP or others. Let's connect. We'll get the information we need. It'll save you a lot of work. But the operations team will then drive that for us. So a processor can say, hey, missing this one piece of information. I'm going to send you a link, get that submitted, and that way I can keep this moving for you from that standpoint. And so they understand as well that we really want to utilize our vendor, Argyle, to verify what we need for their loan files.
Yeah, I remember one feature you guys requested. I mean, it's like a year. It's been in the market now for a while. Was the ability when an Encino application comes in, maybe they don't do it. Our Encompass
Yeah.
integration. I remember you asking about can we read the employer name on the ERLA, connect it to our coverage because you were really focused in on making sure that your processing team looked at Argyle one more time to see if we could cover it. And I think that's the right workflow because again, like most of our clients are, they're focused in on, hey, if it's not a good fit up front and you have your reasons, you're not going to push it. But for a lot of times, they just might not be ready. They
Yeah.
want to talk to a loan officer, they want to talk to a processor. But I just remember that functionality was critical for you and your
Yeah.
right. Um,
Yeah. And absolutely. And that's actually a great point is that, like you just said, is sometimes they just want to get the application in and just see where they're at in that credit process or what their pre-approval is going to look like. Again, telling sales, hey, as part of getting that loan ready to go into processing or then processing, getting it to underwriting, we wanted that integration in our both point of sale and loan origination system to be able to push that back out and give it that second chance for that member to integrate and make that connect to their payroll provider.
Totally. Totally. Okay, so let's move to another hot topic, which is you're leveraging this strategy up front in the point of sale, but you're focusing on rep and warrant relief. So I guess two questions here, Nathan, and I think again important. How have you seen your validation rates improve in the point of sale? And does that differ from ordering it up front versus ordering it down at the LOS level?
It's a great question. So the way our workflow, with it being in the point of sale or whether it's in the loan origination system, wherever we're requesting it, that report ID is coming in. And whenever we run our AUS, it's reading that and saying, hey, yep, you're either going to get rep and warrant or not. We have seen an uptick in our rep and warrant. So when we look at our dashboards on Fannie and Freddie to see what kind of rep and warrant we've got on income and assets, from that standpoint, we have seen an uptick in that rep and warrant relief, and that is huge for us from that standpoint, John. That obviously it's one less thing that an underwriter has to look at. So there's efficiency there. That hey, that income that's coming in that we've got, it's calc, we're good, we're green on that. It's one less thing. So it really kind of helps the underwriter focus in that, hey, what are they underwriting on the file? We just really need to look at assets if we didn't have that finicity report, or we really need to drill in on credit. There's, an account we need to just check. They can take that piece off the income off of their radar and look at the other things to make sure that's a credit quality file for us. And so we have seen an uptick in rep and warrant relief. And again, that translates down to delivery to our investors as well as Fannie and Freddie that we utilize, that we have a saleable loan, and it reduces our risk. We have a big focus on rep and warrant relief, getting day one certainty on Fannie. That's a really high priority for us. And so that's where, again, the processing underwriting team really do like these reports from that standpoint, that they know they have that comfort level. Underwriting, especially, they're so black and white. They don't want to have that question on why is this getting repurchased or why is this coming back to us. If they can take that off their plate, they really like that.
I know we've been super intentional as we build integrations to populate as much as we can, whether that's actually ERLA information. I know you know this too, but one of the biggest issues with validation is employer name mismatch, right? So everything we think about is can we populate that employer name that's directly from the source in our case to help you drive higher validation rates. And I think folks like you that are focused in on, getting applications in and then running AUS to see what the conditions are, if any, right? That POS strategy first allows you to do that quick. There's no
Yep.
waiting time, there's no gathering docs, reviewing docs, calculating the income. We're going to try to do it for you, and then your team has the review and click submit button. So I just think it's a shift in how much you want to leverage this direct source data up front, and you guys are doing that, right?
Yeah, exactly. And I forget that's the thing is, when you're thinking more strategy, high level, you forget all of the little things that this does provide as far as lift goes, whether it's, importing the information about the employer name, those components coming in, John. I'd forgotten all about the about that, is that there is that lift and benefit that it drives efficiencies across all areas of our origination process, which is, at the end of the day, the name of the game.
Absolutely. Okay, maybe our last topic. is, and I touched upon this earlier. There's a lot of tech out there, Nathan. You're always on the forefront of this. How should credit unions be thinking about picking strategic partners, vendors? What questions should they be asking? And we have a philosophy on that, but I don't think it's talked about enough. Of someone said this to me a few weeks ago, building trust through Zoom, through the camera, right? How critical is that when you're assessing a partner? Do you believe in the mission, their expertise, et cetera? So just like your high level take on how should credit unions be assessing technology and vendors that they work with?
Yeah, on the vendor piece, John, I think that's where, again, we have so many people reaching out on a daily basis. Whenever we go to a conference, that information gets sold out, and you'll get blasted with, "Hey, you look at this shiny object, shiny object." But it is those vendors like you that said, "Hey, I'm going to be at this conference. I'd love to just meet with you quick face to face." You can build that rapport and get to know them. But one of the things is, I think credit unions are phenomenal about is that we like to share information. I'm just going to say, put a plug in for that. Is that we like to collaborate. We like to share our best practices. There's nothing top secret. I say this all the time. There's nothing top secret about originating a mortgage. And I think that's the thing I love about credit unions is that we want to help each other do more so we can grow how much credit unions originate. Like we just want I want to see us dominate in the market, to use a Ryan Dorman word. I want to dominate the mortgage world with credit unions. And so getting those references, connecting to someone that does utilize a vendor, how has the experience been? Be candid. What was it like? And that's where you connected us with a couple of other credit unions that did have it, and say the proof is in the pudding. They were there. You guys, and they were supportive. Like I said, as you guys were on all of our transition calls, so our team calls to help the team get through the change management curve, right? And to really adopt and use this process um, from that standpoint. So when you have that kind of the rapport, the connect with the vendor, that you can get to know them, shake their hand or connect over a call and just say, "Hey, what are your concerns?" And be candid with them. I think when they can answer those questions honestly, and then again, the references that you say, "I just need to follow up. I want to talk to a couple of places," and they also share that same sentiment that, hey, they were great about the onboarding, the integration, and then the follow up. You guys didn't disappear from for us, and are still there to this day. Like you said, it's been a year and a half for us, and we still connect on a monthly basis to check in. I mean, sometimes we don't have any updates for you guys, but you're still like, "Hey, we still want to just connect and see you guys, see how life is going," and we appreciate that from a vendor perspective, because again, there's nothing worse than showing up and then people disappear. You guys have been there from the start, and we appreciate that with Argyle.
Yeah, and I would maybe add, one thing that I think from the Argyle point of view is, yes, we've built integrations and and those are good, and we obviously, asked you for feedback. But I think vendors, and I know we do this, is like Nathan, like I have this like stretch idea on a new, whether it's a new product, the way
Yeah,
we're doing reports. It's the commitment to like innovation, but not innovation in our own terms. It's the innovation of, hey, does your processing team think this would be helpful? Right. And
yeah,
you have to be intentional. And I think our goal is to build the kind of relationships where I can pick up the phone and call Nathan and say, hey, we have the opportunity to do X. We think it's going to improve conversion, or it's going to give you more rep or more relief from the agencies. Like, what do you think? Help me think through it.
yeah.
I've seen that be really successful with our roadmap, the way we innovate, et cetera. And I might challenge others in the space to do that too. Right.
Yeah, and that's the thing is the feedback both ways from that standpoint of here's what we're seeing and here's what we need. I think I go back to the beginning of we really wanted this in the point of sale, and at the time I don't think when we very first met just on a Zoom before we met in person, that wasn't really on your roadmap as an important piece. But we said this really is how we want to interact with it. This is how we're approaching a digital strategy, and you said okay, and game on, and away we went. So it's that back and forth that takes just like any relationship, feedback goes both ways for us. And here's some ideas for you guys as well on best practices that others are having to see success and reduce costs and reduce turn times on your mortgages originations.
Totally. I still remember you saying it needs to be interoperable with Encompass and Encino, John. If you can do that,
Yeah.
I did it. Let's
Yep.
go. We
Yeah,
did
you
it.
did. You
Uh,
delivered, and it continue to. Again, that's where you keep showing up for us and looking for different ways for us to deliver new results for our members, and we appreciate that.
of course, of course. Well, a great discussion. Obviously, appreciate you, Nathan, for hopping on. Looks like we have a few questions coming in, and please, if you're with us, please ask away now.
Yeah.
First one. Are you integrated with MortgageBot? We've had numerous conversations, Jim, with MortgageBot. We're not today. But again, we would love to engage in a conversation with Argyle. A lot of that road mapping piece with MortgageBot comes down to client demand. So if there's an interest in Argyle, it only helps us move our ecosystem further. Um, did GreenState investigate others, such as Plaid or Finicity on the VOA side?
Great question. So we did investigate, did do our due diligence. So that's the thing is that we do go through a process whenever we're plugging something in. We look for at least one other, if not two others, to really compare to from that standpoint. We had Finicity plugged in, but again, we had actually turned that off prior to just because of some other pieces of our own internal process. So that's no reflection on that. It was just our own internal processes back then as far as that goes. This one, Argyle just stood out to us as far as delivering something that really did drive results. The one thing that's unique is that, again, we're looking at plugging Finicity back in, and that's something that Argyle is actually a partner with now. And so we're pulling that into our scope with them to plug Finicity back into our point of sale through our partnership with Argyle. So I don't know, John, if you want to talk a little bit about what that means and what that looks like, because we've just started those conversations here in the last couple of months on that.
Yeah, totally. A lot of what we've been talking about today is our open payroll solution, where we verify income and employment. The last 3 months, we've really gone into a relationship with MasterCard Finicity to where we are now have brought that experience into our experience, offering verification of assets, et cetera. And like Nathan and a lot of other folks, our kind of secret sauce is we can help you drive adoption. We know this space really, really well, and banking just fit really well with that. So we're transitioning a lot of our customers, whether they're with Finicity today or using others in the space, to really bring the experience into a streamlined, one vendor shop that understands how to kind of get the most out of your process and how to manage your waterfall the right way to increase your validation rate. So, that's where we're at today, and we've got a great partnership with MasterCard on that end. All right, Nathan, here's one for you. Is Encino integrated with DU and LPA? If so, approval letters available to the borrower who self-serves and scores an AE? I'm assuming you can answer that. That might be an Encino question. Happy to take that to them too.
So can you repeat it again for me, John? Is
Yeah,
it in the chat? I don't have the chat up next to me here.
it's okay. Is Encino integrated with DU and LPA? Are you leveraging the dual AUS in Encino? I think they offer that.
Approve eligible. See, I found it here. So Encino is integrated with DU and LP. We don't allow, our process doesn't have automation that the pre-approval letter is generated without loan officer interaction. I'm going to say that is that we've made a stance that we want that to still have some LO. They're the ones pulling credit right now. There's things coming down the pike, but they are using the Encino point of sale. They're able to, one of the things that John has pushed me is that I do look at tech a little more progressively. I've leaned in on being a beta tester in a lot of things these days, just because, again, I like to see what's coming around the corner for mortgage. And dual AUS is one of the pieces that we're beta testing with Encino on that from that standpoint. So they are integrated. We're using that on the upfront side, and then it pushes into our point of sale Encompass. The only thing we have self-serving in there is they can update some loan amount on the pre-approval, but that's it.
One other question here. What's been key? This is the $1 million question, Nathan. What's been key to getting loan officers and production folks to adopt digital technology? Call it what it is. That's the hardest group to get behind because you're changing
Yeah,
their workflow. They don't like that.
yeah. I'm just going to say it. You can't stop the conversation. So one meeting is not going to make the change on that. I'm going to say that is that you have to keep beating the drum. And so that's where, again, Argyle was on, I think the first couple, we had kind of biweekly calls and we transitioned to a monthly call for the team is that you've got to keep pushing that, until a loan officer really sees the benefit. They may not listen to it. They're on the call, but they're working on something to the side. until they're really needing that verification or that piece pulled in, they're going to just kind of ignore it. The more you can get those champions involved, like your top producers engaged in using and then sharing testimonial with the team, that's where it really will drive those results home. And then connecting them, saying, hey, I see a report. So that's where, again, John provides reporting, and team provide reporting saying, hey, these are the LOs that are engaged in the system, these aren't. And then we can say, hey, Sarah, why do you not use this? Why? Let's connect you with one of our top producers that is, to see how they're integrating into their workflow in their systems, because it's all about how an LO has their system set up. And then if they can make that one little change and get it in, that they take off from there. And then for ops, again, delivering the story home of we need to reduce cost, so we can maintain our edge, is really, really critical. And again, they understand that at the end of the transaction as a member, that we just don't want to have to be nickeling and diming. And that's where, again, the more we can drive home that we can reduce these costs, return that to our members and take better care of them, is really the mission that we share to them.
Awesome. Well, I think that's it. That's a lot of questions. Maybe just to wrap here. First, Nathan, again, thank you. Thank you, ACUMA, for putting something. Nathan, thank you for taking some time and telling your story and really just being a thought leader in this space. For the folks that joined today's call, thank you for taking some time and spending some time with us. If you have any questions about Argyle, feel free to reach out. I'm sure we'll be following up with all the attendees after this, but we'd love to at least kind of chat through your strategy. And if we can help, we certainly will. I hope everyone has a great rest of your week, and we'll be talking to you soon. Thanks so much.
John, thank you.